Greetings, I'm Marilyn Cohen, President of Envision Capital Management in Los Angeles. We manage bond portfolios for individual investors. In today's pop culture, we've got muffin tops, carrot tops, and now I want to talk about credit tops. Credit tops in simple English means we are at the absolute top of the credit cycle. It isn't coming, it's here. And what I mean by that is Standard & Poor's this year, 2015, has downgraded over $1 trillion of corporate credit quality. Wow, that is a lot. You know, post-credit crisis, everything was different. CEOs and treasurers were worried about their bloated balance sheets. They became very fiscally responsible, paid down debt in 0% interest rates with even lower interest rates on their debt. But now, the last several years, as this 0% interest rate mania got bigger and bigger, balance sheets got more and more bloated. So here we are looking at the exact opposite of what happened post-credit crisis. $1 trillion in downgrades. That is significant and more on the way. And don't poo-poo that and say, oh, it's mostly commodity-related corporations and oil companies. No, it's a mixture of everything. Here's a pop quiz for you. How many corporate bonds, how many corporate names are rated AAA in bond land? 20, 24, 12, 3. 3. That tells you how pathetically corporate America has been run by bloating their balance sheets with share repurchases using debt, with increased dividends issuing debt. And I remember way back in the 1980s when I was a young woman in the bond market, there were dozens of AAA credit quality. But there aren't now. We meet with many new prospective clients, and I've had them say, okay, for my IRA, I only want AAA rated bonds. And I said, I'll give you the 3 names. Go do it yourself. You don't need to hire me or anybody else. What are those names? That's it. Not IBM. Oh boy, not IBM. Not Abbott Labs, not anything else. So let this be a good GPS system for you. Stay in the triple Bs. Why triple Bs? Because that's where the majority of the market is. Over 70% of all corporations' bonds are rated in the triple Bs. Triple B plus, triple B, triple B minus. So don't be afraid of the Bs, but you better stay on top of the news, the quarterly reports, the revenues to see whether or not your companies are showing top-line revenue growth or whether the financial engineering is going to continue to give you additional downgrades. This is a call to arms. The credit cycle has topped. Be careful. Nobody can insulate you. We are going to have downgrades also in our portfolios. You just want to make sure that you are quick, agile, and it doesn't nuke your portfolio. Thanks for joining me. I'm Marilyn Cohen.